Hello Freedom Builders and welcome back to the channel. Today's video is a video from several requests you have been making about how I have performed in my different portfolios here during the market crash of some sort, or at least the retracement in the overall markets. And most questions have actually gone on my ETF strategies because I showed them in a video a while ago and said that they were doing somewhere around 13% per year on average with a very nice Sharpe ratio, meaning that my performance is very good when we adjust for risk for the drawdowns taken. So what I'll do today is just quickly I'll give you a quick Corona update, and it's not because all of my videos should be about the coronavirus, but it is actually kind of essential to this portfolio evaluation. Then I'll have a quick look at my different portfolios, my performance, and I will have a look at some new portfolios that I am putting together and that I'll start tracking here on video. First of all, the coronavirus. I have been telling you about what I think about this. I think it is going to grow, and the reason why that is important is that when I use my normal strategy, and I have been showing that in several videos, my trend following strategies, that strategy sends me out of the market maybe once a year or once every 2 years when the market dips. It did so in Q4 in 2018. I got out and the market went further down, and then I got in again in January. Right now, the model has actually sent me out of almost all my stocks. I still have a few Danish stocks left and a few US stocks, but basically I am very much in cash. Now that can be bad if the market turns on a dime right now, because then it takes a little while for me to get all my buying signals again, and I'm a bit behind then. So in years where we have a lot of zigzags, of ups and downs quickly after each other, then my strategy suffers a bit. But what might be coming now, and we don't know that, but if the coronavirus really sets the agenda all over the world, and you might be thinking it is hype, but that doesn't really matter what you think, because if it sets the agenda politically in the US election and so on, there will be some severe consequences here. And we have seen that in China. They have been shutting down, and I mentioned also in my Black Swan video where I said that this could be some sort of black swan, even though we might have been able to predict that a virus like this would come at some point. So what I'm saying here is that my strategy, the strength in that strategy is that I am sent out of the markets when I get sell signals, and then I am out like I was in 2000, 2001, like I was in 2008, when everything drops 30-40%, and then I get in a bit closer to the bottom. So when I go through my portfolios here, the important thing for me here is that I follow my strategy to the point all the time. That of course also means that I get some drawdowns, and I have had drawdowns this year on 10-11%. I was very well up on my Danish portfolio with plus 12% at some point, but right now I am just about break even. But that's okay with me. It is of course always irritating to see a profit disappear, but I know that as long as I follow my principles here, I have been trading this for a lot of years. I have been back testing it for even further back than I've traded myself, and it works. It keeps me out of the big crashes, and then there will be a retracement once in a while where I get out a bit late, in a bit late, and lose a bit of money compared to the market. But that is okay with me. That is a price I gladly pay for not taking the big crashes in my portfolio. So let's have a look at it. My portfolios here, and just to be clear, what I meant about here, the Corona update, is that this coronavirus might be one of the cases that could actually send the economies and the markets spiraling down, and therefore my strategies are keeping me safe here. I don't know if I've got that clear enough. My portfolios is that I have a Scandinavian and a US stock portfolio. I have something I call a Danish swing trading, where I only focus on the largest 40, 50 Danish companies, since I am located in Denmark. I'm mostly long here, but in markets like this, I can actually take a few short positions as well. Then I have money in two different algorithms. I have my own day trading portfolio and I have my ETF portfolio. And these are the results I'll be looking at here today. So if we are looking, and by the way, I apologize, this has been put together very quickly because I got so many requests for it. So in the next update, I will show a bit better with graphs and so on. But as I told you, the Scandinavian portfolio, both my Norwegian, Swedish and Danish stocks have been up quite a lot this year. But with the downturn right now, I am just about break even. The Danish is a bit to the good side and the Norwegian is a bit in loss, but altogether the Scandinavian stocks are just about break even, plus minus 0.5%. My US stocks is a bit better. They are at 1.8% in profit. I should say that this PowerPoint slideshow was made yesterday. So the plan was to make this video yesterday, but I made a Corona video instead. So these numbers can vary slightly, but not much. So basically my stock portfolio are close to break even for the year so far. I can say that my Scandinavian portfolio last year made something like 22-23%, or my Danish stocks where I have most of my Scandinavian money. And that was a bit less than the market overall. I did it, however, with a very small drawdown, and I was only invested with 60 or 70% of my money on average over time. So that was actually a very good performance, risk adjusted last year. My US portfolio last year was just around what the market did, 1 or 2% below what the market did, so that was fairly okay as well. So let's see, right now I am sitting on a lot of cash, and many of you have asked me if I have chosen to go into cash. And that's not really something I choose as much as it is my strategies that are telling me, now you have a sell signal, you need to get out of the stock. Then I sell it. And if I don't get a new buy signal, and right now it is a bit hard to find some good buy signals with my strategy. If I don't get a buy signal, well, then I stay in cash. So right now I am mostly in cash in most of my portfolios, but it's not an assessment I have made of the market to say now I think there is a larger risk, so I will stay in cash. It is simply my strategy is dictating it. All right. Then I have the Danish swing trading, and that is up a bit since yesterday, because I'm short in a couple of stocks that are dropping pretty hefty right now. But last night, the day before, I was up 3.14%, and the market was just around 0. So that one is doing a bit better, but that is also because it's coming out of the stocks a lot faster. The signals are they have been giving a lot faster. So I am in a lot of small trades where I am in maybe a week or two, and that is not really my trading style, but it is a portfolio I am testing. My primary portfolio or trading style is on weekly charts, where I'm taking long trends, and I actually only need to be watching my portfolio once per week. But this is a portfolio I'm testing, and right now it's doing fairly well. I do have another test portfolio as well, where I have a small amount in, and that is one I call SPY x2, and that is a signal for the S&P 500, where I'm getting sell and buy signals. I can only go long, and when I go long, I do it with a 2 times the leverage, and that one is down 2.7% as of yesterday, the beginning of yesterday before markets opened, versus the SPY that was just around 7% at the time. So we'll have a look at that in our next video, and I'll show you some charts as to how it is doing. Now to the portfolio that most of you have asked about, and that is my ETF portfolio. If you haven't seen the video, then my ETF portfolio is a portfolio where I have a number of ETFs that I have tested and back tested and that have proven to be profitable with my strategy. What I do is that I rotate these ETFs once per month. The first trading day of the month, I put all the numbers that I need into a big calculator, my Excel spreadsheet, where I have programmed a little algorithm. And I am looking at momentum, I'm looking at volatility, I'm looking at volume, and all of that is mixed together, and out comes a mix of ETFs from my ETF universe that I want to have for a month. So no matter what happens over the next month, there are no emotions. It's all mathematical and systematical. So no matter what happens, I stay in these ETFs for a month, and then next month I rotate once again. Sometimes it's the same ETFs, then I don't sell any. Some of you have asked, how do I get to the percentages, the allocation that I invest in, and that is kind of my secret sauce. That is something that I have been working on for a large number of years. But basically it is a momentum rotation strategy. There is a billion different variations there. But for 2020 right now, we are in a loss right now. You can see January gave us 0.87%. Then February were not so good. And that was because we were primarily invested in SPY, the ETF called SPY. That is the ETF that tracks the S&P 500 index. And that is, of course, a bit expensive when things drop the way they do. But then in the beginning of March here, as you can see, the ETF allocation right now is that we have a portion in GLD. That is the gold ETF, tracks a gold market, so it's great when gold goes up. Then we have the VNQ, and that is a real estate ETF, and that has actually also been doing quite well, and I have a feeling that it will do even better now that the interest rates have been cut, but let's see how they are doing there. Then we have a quarter of the money in TLT, and that is a bond ETF. That should also go up now that interest rates are cut and Fed are buying bonds. That should put some upwards pressure on the bond market. And then we have still 40% in SPY, the S&P 500. That is the allocation right now. And that was the allocation I chose from the beginning, or the algorithm chose from the beginning of the month. So if any of you are thinking about, should we copy this exact allocation right now, I would not recommend it. And it's not like I am going to give you the exact allocation every single month. So it's not like my videos are going to be some sort of a signal provider. This is just so that you, for a couple of months, you can keep track on this and see how it's actually doing and calculate it for yourself. So right now, totally accumulated, we are at a minus 4.6%. And yeah, well, there are a few years with total losses, but I think out of the both the years I have been trading this myself and the back testing, I've been able to back test this quite far back. I think it's only 6% of the years or something like that, 1 in 15 years, that ends up in a minus. And 2008, for instance, gave a plus 11 or 12%, I think it was. So it is a strategy that is kind of an insurance against some really big downturns in the market. So I'll keep tracking this and I'll let you know how it does. All right. The last two here is, as you know, I mentioned that in a couple of videos. I have put money into some currency algorithms. I have been day trading quite a lot myself during the years, and it is hard work to day trade. So at one point, and with small kids and so on, I started to look for some algorithms that might be able to do some of the jobs. And believe me, on that algo market, there is a lot of bullshit, to be honest. Most of the performance charts you're seeing are completely made up, or manipulated in back tests or something like that. You should be very, very careful out there choosing some of the algorithms that are for sale for next to nothing. As I told you in an earlier video, these algorithms are run by one of my acquaintances here from Denmark, and I've been tracking them both first without money into them and getting real life results every single day from them. And when I saw that they were stable and good, and they actually did very well during Brexit and during some different crises in the market, then I started to put a bit of money into it, and I'm slowly building up that portfolio right now. But as you can see, I am in two different portfolios. I should say that there are 3 portfolios, and I was a bit lucky because my algo provider, he shifted a broker, so we have the money at a very good and solid broker right now. But what that made me do was that since it was a bit of hassle with opening new accounts and shifting money over and so on, I only got into 2 of the algos. The third algo actually took a 30% hit, and that is what these algos do once in a while. There is a circuit breaker on it at around 30%. So I was lucky not to have my money into one of these with 30%. But then again, it would only have been at max 1/3 of my money in there. So that would have given 30% loss on 33% of my money. So approximately 10% down. And these algorithms would almost have made up for that by now. So that is actually quite nice. As you can see, these are the results. I have just taken some screen dumps from my FX book. That's where you can track these algos, so you can see that you can get your results verified, so you know that it's not just something I've made up. But as you can see, the 2 algorithms here, one have made in January 1.8 and another 2.75%. So that was quite nice there. That was, I don't even have the combined numbers here, but that was something like 2.2%. I got in interest here in January. Then we had the one of them did very well in February, 5.4%, and another did 0.5%. So that was around 3% altogether. And then in March, and actually these are old numbers now. I don't have the numbers that came in yesterday, but they actually both made almost 1% yesterday. So right now, the number here should actually be 1.6 and 2.6%, and we are less than a week into March. So that all looks very, very nice. And as you can see, they are not extremely risky. It's not one of these algos, some of these algos that are promising 20 or 50 or 100% per month. You can't find these algos, but I can almost promise you that you will end up with a lot less money, because they are taking some horrible risks, and these algos are very, very well controlled. So I'm slowly building up a portfolio here and letting some of the accumulation here, I'm letting my money run in the algos, and then once in a while I'm putting a bit more money into it. And I hope that within a half a year or so, I will have on an average 1,000 or 2,000 euro in profit every month from these algos. So that's actually very, very nice. Let's see if they can perform. Of course, I will give you an honest review every time I go through my portfolio. So if one of these algos takes a 30% hit, you will also know that. All right, the last portfolio here is my own day trading. And I said just a couple of minutes back that I had stopped day trading. That's not completely true. I have been day trading a bit. But the time where I day traded a lot, I was trading on 5-minute charts and 15-minute charts and so on. And that is, for me at least, extremely stressful. Way too stressful for my way of living. I really value my sleep at night, so these stressful times is not really something I wish back. It yielded quite well, but then again, I was always grumpy or always moody because of this trading. So what I've taken up now is some longer term day trading, or you could maybe call it swing trading, because I'm trading from a 4-hour chart, a daily and 4-hour chart. So it's basically what I also do in my normal trend trading, where I look at the trend on a weekly chart and sometimes time it on a daily chart. But what I do here is that I look at the trend on a daily chart and time it on a 4-hour chart. And I started just the last couple of days in January, made around 0.7% there. Then February, I had some okay times to trade there. It was a bit busy with my subscriber business too. But since it is a 4-hour chart, I can put some trades on in the morning and then pretty much forget them all through the day. So that made 4.3% in February, where the entire market went down. So that was quite a nice hedge as well, combined with the algos. That was a nice hedge, and that is how I use it. I trade the larger currencies, the majors. I trade some gold, I trade some oil. And in markets like this, that can actually be a very profitable business when everything moves all the time. All right, and then here in March, we are now at the 5th of March, and I am up here on this chart 1.12%. But right now I'm actually in a couple of trades. I can just see them here on my other screen, and they right now are at up 0.4%, something like that for the day. So this one, if I closed everything down now, would be 1.5%. My goal here is to make 1 to 1.5% per week. And that might not seem like a great deal compared to some of the day traders you are meeting on different Facebook forums, claiming that they can make 1% per day or 5% per day or something like that. But well, many of them are not too keen on sharing their track records. So when I ask for it and saying, hey, Len, if you claim to be making 50% per month and do that on a consistent basis, first of all, you would be richer than Warren Buffett within a year or two. And secondly, just drop me a personal message with the last couple of years of performance data. And I have never received that. So I'll be glad to share my performances with you here. And I don't expect them to be 4% every month. There'll also be losing months, and that is the name of the game. So these are the portfolios I have right now. I haven't put amounts into it because, well, I know many of you are curious as to how much money do I have put into this, but it's not something that I will put on this channel, not right now by now. The algos and the day trading I have mentioned before, and I have no problems there, but in my stock and ETF portfolios, it's not really something that I will give out in public. All right, the last thing today is that I'm planning a couple of portfolios that I'll track here on the channel as well. And that is one where I am looking at dividend aristocrats, where I'm picking the best of them with the shareholder yield in mind. You might remember the shareholder yield video I made, and I'll have a portfolio of these stocks that I'll follow, and I will also have one where I am picking the dividend stocks with the best value, where I've used the software Fast Graphs too. But I'll get more into that in a video, I think in the beginning of next week. You will see how I construct these different portfolios. I might even get to it tomorrow, but I'm not certain about that. So that was the overall performance of my portfolio so far. I am actually quite satisfied with the allocation, also the performance, even though that 10-12% is quite annoying to see disappear in a market crash. But then again, we know that these retracements come all the time. And some of you are buy and holders, where you are long-term buyers, and that might be the point soon where you can start buying some cheap value stocks. But I'll get into that in a later video. I hope this answered the questions about my portfolio performance, but you are always welcome to ask on my Facebook, Building Freedom on Facebook, or here beneath my my YouTube in the comments sections. You can just put your comments down below. Anyway, if you haven't done already, remember to subscribe to the channel. That means a lot to me that so many of you are subscribing and liking the videos and commenting and all that sort of stuff. Thank you very much for that. And until next time, take care of your money. I'll talk to you soon. Bye.